Hello everyone and welcome back to Innovation Markets. We hope you're all well and ready to get stuck into lesson number 4 in our Forex course. So we've had great feedback on course lesson 1, 2 and 3, especially number 3 seems to have been a game changer for so many of you, and it's great to see that we're able to help so many of you and help you with your trading journey and just help on so many levels. We've had lots of feedback. Great entries from, especially about market structure, the course lesson 3. We've had especially good feedback about that one. It seems to just been that light bulb moment for a lot of people, that eureka moment, and we've been getting sent people taking their own trades, great reward, great risk, and just so much feedback. It just quickly just go onto it on our Innovation Markets page, guys. This is our Instagram page. This is where we get a lot of the direct messages, just a lot of feedback. And for you guys as well, if you're not following here, we give a lot of interesting information here as well, like about trend lines, crypto. There's so much stuff here on our page, so go and take a look at that if you're not already following Innovation Markets. But we've had so much feedback there from that course lesson number 3, so nothing makes us happier to see you guys progressing, learning, and actually being able to make money from the market at this stage already. And we're only 3 lessons in. So on that note, we're 3 lessons in. We told you from the very start, we're going to be building from the foundation up. We want to build a very strong foundation, and each episode is going to be like adding another brick as we build the walls and build up our knowledge and our vast knowledge of the Forex market or the crypto market with our crypto lessons, so you understand absolutely everything. But it's all about having a good foundation to start off with. So Forex lesson 1, great start. We explained just like you can see in front of us here, we top down analysis. You can see the support, the resistance, monthly, weekly, daily, just like we covered in course lesson 1. Then we added on the course lesson 2, which was the trend lines, and then we added on the market structure in course lesson 3. Today we are course lesson 4, and we're, just like you can see in the title, going to be talking about price action. But price action, because it's number 4, doesn't make it any less important than number 1, 2 and 3. The only reason it's coming afterwards is because you have to understand the first 3 before we start looking into price action, because it's the support and resistance is the first thing you need to know. And then support and resistance is also in the form of trend lines, which is why trend lines was number 2. And because you need to understand all forms of support and resistance. Then we needed to understand market structure, about how it moves, higher highs, higher lows, if it's in a trend, if it's in a range, and so on. And then now number 4 steps in, and now we're going to be able to understand exactly what is going on around the areas of number 1, 2 and 3. So around the areas of support and resistance, around trend lines, and around market structure, because that is where price action is important. We're going to get into this in a little bit more over this lesson. So this lesson, you guys know we like to be very thorough, a lot of detail, so there's going to be no time limit or no cap on how much detail I go into with price action. I'm going to be going from the very beginning, explaining what even price action is and what we call the price action on our charts, all the way through to going into different candlestick formations that we use, patterns that we use that you need to know, that you are must know in the market. And this could go into 3 or 4 different parts. I don't know right now. It depends on how long each episode goes into. I don't want it to be too overwhelming, so I don't want any lesson to go over 1.5 hours. So we might have 2 or 3 different parts of this lesson for you guys to understand, which is underneath the price action umbrella. And that therefore shows you how important it is. For me, it doesn't really, it's not any less important than lesson 1, 2 and 3. It's that important. And price action for me is one of my favorites. It's so important. I can't stress it enough. So on that note, let's get stuck in to exactly what it is. So I'm going to sort of run over who, what, where, when, why, what is price action, and I said strip it back to the start. So in front of us here quickly, you can see our monthly support levels, key support levels. Then, as I just explained a minute ago, we normally, what we'd see on our charts is a trend line like this, a trend line like this, and then a trend line like this. So we've got long-term, outer, inner. You can see we're testing it at the moment here on the daily candle. And then for a lot of people who are a little bit more advanced, they'll know what I'm talking about with Fibonacci. They'll have things like this on. They might have another one on. You might have a zone highlighted. People highlight these zones, or they highlight their support and resistance levels. And then you start getting people with charts like this. There's many, many people that have charts like this. Even good traders have charts like this. But taken from our advice, you're going to start to see how you can do things a little bit differently. But if you're especially if you're starting out from beginning, follow our advice and what we explain here and how to have your charts. For me, I used to have charts like this. I used to be like this when I first started trading. I could understand what was going on, but I didn't realize until I started stripping it back how I was actually missing out so much. And what I mean by that is you don't need to have all of this on your chart. To me, this is an absolute mess. I hate what's in front of me right now because I can't understand what is exactly going on, because there's so much different things going on. I can't read the price action. I need to see the price action because it's so important. But right now I can't see it. There's so many different things in the way. And what price action is, guys, before I clear this, what price action is basically the language of the market. You need to write that down if you need to, because it's very, very important. You have to understand we're technical analysts. We're here to understand what the market's doing. We can have supports, resistance, Fibonacci's, and all that sort of stuff that comes later. That's not but none of that is as important as price action. What the market is telling us. Price action is telling us what is going on in the market every week, every day, every 4 hours, every hour, every 30 minutes, every 15 minutes. You can all these different time frames where on every single time frame there will be a piece of price action in front of us representing what happened in that time frame. But if I can't see it clearly, I don't know what's going on. So at the moment, as you can see in front of us, there's a lot here. I can't see it. But as I just likened the price action to the language of the market, that's exactly what it is. You need to understand, one, you need to understand the language of the market, learn it, just like, imagine like learning Spanish, or if you're not English, learning English, or learning French. It's like learning a new language. And after a while, you're going to become fluent in reading that language on the chart. That's physically what it's like. If you're brand new, some of this stuff, it may start going over your head. You're going to have to re-watch these videos again and again and again. But then when you get to my stage, or a long time ago, you get fluent in the market. I look at a chart, I know exactly what is going on. I know what it's telling me within seconds, because like anyone who's fluent in a language, they don't have to think about what they're going to say. They're fluent. They know how to say it. But then also what I like in this too is because you're reading price action. So when you're looking at price action from the market, you're reading it. But imagine you had the book and you start scribbling loads of lines all over the book. Then you start putting horizontal lines, vertical lines, ascending lines, descending lines, then some Fibonacci on top of your book. How are you ever going to read that book? You can't read the words that are coming out at you because there's so much stuff in the way. It's clogging up your vision. So this is very, very important, guys, that with price action, you need to see price action and you need to strip your charts back. You need to take all of this stuff off. I didn't realize how important this was until probably a good few years into my trading. And then when I started stripping it back, I was like, wow, I can really actually, like all the stuff I was missing. For instance, see, this is an important candle, but sometimes I would have missed that because I had so much other stuff on my chart. And then what I started doing is keeping my key levels on a chart like this to be honest, I don't need this many key levels right now, but I'm going to come back to that. It's on for course lessons. But as you would have seen on my other lessons, I always have an empty chart like this, because here is what it's just clear, tells me what price action is doing, because I understand the market, I understand the language, and just by looking at it, I know I can see exactly what's happening already. I don't have to draw on certain lines. I don't have to do certain things because I'm fluent with the market. So that's what I want you to do. I want you to always have one clean chart and then one chart that you can flick back to just to check, are we at key levels? Are we at a very, very important of support and resistance? But other than that, I want you to have one clean chart. And then again, give us your feedback, guys, after a few weeks, then tell us how you start to feel about it. But it's very, very important that you have one clean chart like this. So what we're going to break down, as I said, is go from foundation levels, even with price action, and work our way up. So over the next 2-3 hours, we're going to talk about exactly what is in front of us, each and every bit of price action in front of us, all the way through to candlestick formations and patterns and so on. So what is price action? Price action is what happens in the market within a specific amount of time. So like I mentioned a minute ago, there is many different time frames that we use. We've got daily. So what we've got here is a daily chart, which means that each of these, and we call these candlesticks, I'll get to that in a minute, each candlestick tells us what happened for a day in the market. And once we understand what each candlestick means, or we understand what candlesticks are, then we'll understand what happened in a day. At the moment, if you're brand new to trading, you won't know what this means, because I haven't broken it down for you. But what we need to understand first is this means what happened in the market for today. If I drop down to the 4-hour chart, it means this candlestick is showing us what happened in the market for the last 4 hours. Same as this one, same as this one, same as this one. We can go down to the 1 hour time frame. It does the same thing. Each candle is 1 hour of time in the market, and it tells us what happened in that last hour. Now, I may add some things at the start which might need to come later, but as they come in my mind, I want you to write them down. What we have to understand, just like support and resistance, just like trend lines, just like market structure, every candlestick, the higher the time frame, the stronger the candlestick. So what we end up doing, is to come a little bit later in this lesson, is just like the monthly key levels, where we done top down analysis, started from the monthly, went down to the weekly, down to the daily. Just like that, on the candles, we need to be looking at the higher time frame candles and working our way down. The higher the time frame, the stronger the candle. So once we understand what each candle means, when we start your week, you want to be looking at the weekly candle. Then you want to drop down to the daily, understand what the daily is telling us, drop down to the 4-hour, and then 1 hour. 4-hour, just while it's in my mind, is my favorite to look out for. Daily and 4-hour. Daily and 4-hour candles tell you the direction of the market. You want to write that down. Weekly, daily, 4-hour are for building your bias and the direction of the market. So when I'm trying to decide what the market's doing, I look at the weekly, the daily, the 4-hour. That tells me where the market's going to go. Then anything lower than that, I drop down to the 1 hour time frame. I drop down to the 30-minute time frame, and I drop down to the 15-minute time frame. I don't use any lower, but the 1 hour, the 30-minute, and the 15-minute, that gives me my entries. So once I've decided my bias on the weekly, daily, 4-hour, I drop down to the 1 hour and lower to then try and get an entry. And you'll get an example of that shortly as we look through some examples. But again, before we go too far, let's just understand what each and every one of these are. Now, as I said, these are called candlesticks. Why are they called candlesticks? Because they look like a candle. Imagine this as a body of a candle, and it's got a wick on the top. It's got a wick here. Each of these white wicks, we call them wicks because it looks like a candle, often called Japanese candlesticks. Many people who get into trading to begin with go and buy a Japanese candlestick book. I know I did. You start trying to learn all the candlesticks. But it's one thing learning candlesticks, the other thing is knowing when to use them. And that's the missing link, which I'm going to show you, because a lot of people go by candlesticks, especially people who are very, very new. They go by candlesticks in the market, but there's times where they matter and there's times where they don't. So write that down, because we're going to be coming back to that as well. There's times that candlesticks matter and there's times when they don't. So not every candlestick matters. Just a little hint of what we're going to get to is candlesticks matter when they are placed with course lesson 1, 2, and 3. That's where we want to be looking at candlesticks. So each one of these is a candlestick and represents a time in the market. Currently we're on a daily time frame. So this candle tells us what happened for this day in the market, once we understand what that candle does. Same as this candle, that was showing us what happened yesterday. You can see at the bottom of the screen, 16th of February. This candle here, 15th of February, tells us which each day in the market has actually done. Same if we drop down to the 4-hour time frame. Now, I'm going to quickly go to another chart and to try and break this down a little bit more. Now, what you guys, I've pre-drew this because it don't take too much time. What you guys will probably be more used to seeing is, by default, a green and red candlesticks on a white chart. Innovation markets, we have different colors. But it isn't just down to looking like our branding. It is actually very, very important why our candlesticks are the same color. Some of you already know. We're going to get to that more in the future. But I'm going to start off with what you will be used to, and so that you can learn. But then you need to understand what each means. But then we'll understand, explain our way and the way that we use these candlesticks. So first off, what we've got here is basically here. With these 1, 2, 3, 4, 5, 6, what I've drawn out here are candlesticks, our version of candlesticks. And these are really the only ones that you really need to know right now. So you can imagine if you've got a Japanese candlestick book or you Google candlesticks, there's going to be hundreds of images. But really we can condense it just down to this for this course lesson and for basically what you just need to know for now. We will develop a little bit more, but you'll be surprised at something very, very simple I'm going to show you today. And I'm going to give you a little bit of homework to go off with before we go have the next lesson. Hopefully you guys then will be able to see how powerful this is. And also once we combine it with lesson number 1, 2, and 3, I hope there's light bulbs going off and you're realizing this is starting to become a lot more simple and you're starting to understand a lot more. So each of these here is a candlestick. Here we're on a 4-hour time frame, so each 4 hours, 4 hours, 4 hours, 4 hours in the market. So these are the ones that I want you to know and need you to know as we progress. Here is what we call a Doji candle. You can see here, D-O-J-I, Doji candle. This represents indecision in the market. Let me break that down for you. So at one point, so basically, when the market opens, I'm going to just forget about all of these to the right. I'm just going to use a horizontal line for this Doji candle. This Doji candle is currently green, so that means it's got a bullish body. But we've got a body of the candle and we've got a wick. So we've got a wick to the upside, we've got a wick to the downside. You can see we have a wick here on this candle, wick here. You can see nearly every single candle has a wick. Nearly almost always has a wick. So that's representing what has happened within what? Within that 4-hour time frame. So let's just pretend that this is a 4-hour time frame Doji candle. What is it representing? Here is representing the top of the candle. Here is representing the bottom of the candle, or the bottom of the candle. Here is representing the top of the candlestick body, and here is representing the bottom of the candlestick body. Now, just zoom it up here. So with an indecision candle like this, what it's showing us is that at one point the market, you can see it's green. So at one point the market pushed down, and this candlestick, the body of the candlestick was down here. But then by the time this candlestick closed, price had pushed back up and the body of the candlestick closed here. But dependent, we have to drop down to lower time frames, but we could have had price could have pushed down here, but then at one point it was also up here, because we can see the wick was up here. So the wick shows that price has hit this region at some point. So you can see here, this may have been bullish before the candlestick closed. So we would have seen a big green candle, but then before the candle closed, price pushed back and then it closed here. Same with the bottom of the candle, price pushed down and then it pushed back up. What's that showing is indecision in the market. Where does indecision come from, and what is indecision? Well, in the market, everybody knows the bulls and the bears. Very famous in trading, bulls and the bears. Think of Wall Street, think of a big bull on the street there, or just stock markets, bulls, bears. It's what people call for the price moving up and moving down. Bullish, bulls, it means bulls, imagine an actual bull is driving price up, and then you've got the bears pushing price down. What is going on every day in the market on every single time frame? 4 hour, 1 hour, 15 minutes, weekly. There's a constant battle in the market. Every minute of the day, every second of the day, there's a constant battle between the bulls and the bears. The bulls are trying to push price up. The bears are trying to push price down. Bullish means up. Bearish means down. Bulls up, bears down. Bulls is strong. Bears is weak. Pushing price down. Up for bulls. Bears down. So if we see indecision in the market, what does that mean? It means there's indecision between the bulls and the bears. It means that these two are having a fight, but no one's really winning. So the bulls at one point have been strong and price is pushing up. And before that candlestick closes, which is another very important thing, we always need a candlestick to close before we enter, but we'll get to that in the future. At one point the bulls were pushing this candle up, and looking at this candle, you may have thought, okay, the bulls are in control. But then price pushed all the way back down again, and then the bears stepped in, pushed price back down again, created this wick at the top, and that means that the bulls were not able to progress. They've hit this level of resistance, and the bears have pushed price back down again. In turn, the bears would have continued pushing price back down, but then at one point, the bulls stepped back in and pushed price back up again. So here, there was indecision. You've got a body of the candlestick is here. We often see this being a lot smaller. With doji candles, they vary a lot, but they all look pretty similar and mean the same thing. Sometimes you can have a doji candle like this. And what it basically means is indecision. The bulls can't beat the bears. There's a fight going on. Nobody's winning. It's like tug of war, but no one's pulling anyone anywhere. Like they're just stuck in the middle. They can't move anywhere. So that's in a doji candle. Not enough emphasis gets put on these doji candles, because if you actually look at them and use them a lot more than the average trader does, they are actually very, very, very useful for knowing when to get into the market and when to get out of the market. Both as important as each other. Knowing to get into the market is one thing, but knowing to get out of the market is also very important, because otherwise you could see all your profit go back into break even or go into a loss. But the doji candles are a great signal to tell you when to get in and out of the market if they're used with course lesson 1, 2, and 3. Next candle here is here, as you've seen here, is what we call a doji candle. So we're going to run over that a little bit more. Here is what we call a bullish engulfing. Now I've done this in green, as I said, because most of you may be used to seeing the default colors of a green and red. Bullish engulfing means that the bulls, so the price was here, so that means that price, because with this indecision, where the body closes means that's where price closed. So this is a green candle. So even though price pushed down here, price pushed all the way back up again, and then price closed here. So there's always an opening of a candle and a closing of a candle. So let's just make it simple. I won't confuse the matter too much. So let's just see here. We've got this candle here, which is called a bullish engulfing candle. What it means is that price, because of the bottom of the candle, the body of the candle is here on this line. let's not think of it continuing from here. This is a complete separate candle that I'm teaching you about. I'm just going to remove this now. So here, let's imagine price started here. The body of the candle has started here. So that's where price has opened. And because the top of the candle, the body of the candle is here, that's where price closed. But it doesn't mean that that was all that price did. We can see price actually came up. We can see that price actually came all the way up to the top here, but the body of the candlestick closed. It's still a bullish engulfing. Some of you will be used to seeing a bullish engulfing look like this. Sorry guys, looking like this, but it doesn't have to. It's bullish engulfing because why? This candle is bullish and it's engulfing. Think of the term engulfing. It overcomes something. It's engulfed this candle here. So that means that this price action has opened here where the bottom of this candle is, and it's pushed all the way up here. It's pushed all the way up here, but the bears have been able to push price back down a little bit, but then price has closed here with the top of this green candle, but it has engulfed the previous price action. So this is a sign of bullishness in the market and a sign that the bulls are in control and that price is going to start pushing up higher. So we can look for buying. We can look for buying potentially on the next candle, maybe a slight pullback, and then we can look to buy. Then if we just move this up higher, we can imagine that this bullish engulfing came all the way up here. As you can see here, if we saw a nice big green candle like this, we think very, very strong. People immediately think, okay, bulls are in control and they want to jump in the market, especially when they see green, the color of money, psychologically, green just gets people excited in the market. It's psychological reasons that we use colors here. We'll get to our colors. We'll get to that in the future. But green here gets people excited. They see a candle like this. People just want to jump in. They want to buy here. They want to buy at the highs. They want to see a push up. They think that price is going to push up higher. And then what often happens is price can do that. But let's just imagine that this level here that I'm showing as an example is resistance. The next candlestick I want, so here, sorry guys, I'll just quickly go back. Bullish engulfing. This is the name, bullish engulfing candle. Green, I've written everything down here. Long means to buy. Long means to buy. Buy means strong, bullish means strong, bullish here, bullish, strong, buy, long, all mean the same thing in the market. You hear people shouting out different things. Say, oh, I'm long on GBP USD, means they've bought GBP USD. So if they're saying they're bullish on GBP USD, it means they think price is going to push up. So this is a bullish engulfing. So we've got one candle here, Doji. We've got a bullish engulfing. This is a second candle. Then, as I said, many people will see this, especially other people who have been trading will know that see a big bullish candle like this, especially on a 4-hour time frame, you would expect price to push back up or to keep pushing up on the next candle. And that's often what we see. But how many times have we seen where price has been bullish like this, and then all of a sudden, price pushes all the way back down? You might have bought around this area, thinking that price is going to keep pushing up higher. Price pushes all the way back down and closes below resistance. Then you have this big what? This big wick. The bigger the wick, the more it shows that price is weaker or stronger depending on the candle. So here it means weaker, because the bigger the wick, it means the bigger that the bears were able to overcome the bullish push. So imagine going this far. Imagine going this far and something being able to, if something pushes you back that much, you say, well, I'm stronger than you. On the next candle, I'm going to make up that ground. But imagine you push up and then someone pushes you back all the way back to where you started. You're like, oh, okay, you're stronger than me. You're probably going to overpower me on the next candle because they're too strong. You've tried to push this far against them, but they're strong enough to push you all the way back down. So they're probably going to overcome and engulf you on the next candle. That fight between the bulls and the bears non-stop. That's how you have to think of each candle. So here, the bulls have been strong enough to push all the way up, but then they've lost ground. At the end of it, the bears were stronger than them and made them retrace all this way back down. So they've now come into the market and said, no, you're not going any further. We're stronger than you. We're going to push down. So this, if used at the right place, is a good sign of weakness and that the market's going to move down. So here we call this a shooting star, one of my favorite candles. Shooting star, often to show you where to enter the market, especially if you're in a downtrend or you're looking to sell at resistance. A shooting star is very, very important. Then, so that's the third candlestick. We've got 1 here, Doji, 2, Bullish Engulfing, 3, Shooting Star. 4 is basically the opposite of number 2. Bullish Engulfing, Bearish Engulfing is the opposite. I'm showing you the polar, the two different sides. Here we've got a shooting star. Then we've got, okay, so just imagine what we said. The bulls pushed us all the way up, but then they managed to get pushed all the way back down again. Now the next candle, because they're so strong, they've actually opened up on the next candle. Sorry, so we've opened up here. You can see where the top of the body of the candle is. We've opened up here, and then the price as what is done then is pushed all the way down. So the bearish push is pushing down, pushing down, pushing down, pushing down, pushing down. It's got to here, but then we can see we're at this level of support. So it's got to here, but then it said the bulls have made some bit of a fight, put up some sort of show to say, hold on, you're not gonna pass me that easy, and prices then pulled back up again. But for in this instance, we're actually going to just make it down a little bit lower, because what I want to show you is a bearish engulfing. But that was a good example to understand how price action worked if it did pull back a little bit. But in this instance, I'm calling this a bearish engulfing. So what I need to see is that price has actually engulfed. But there's there's a few different types of bearish engulfing. But here, this could be a bearish engulfing even if it was here. Why is that? Because it engulfed the previous price action. The more price action that it can engulf, the stronger the candle. But here it's only engulfed 1. But if this can engulf 2 and come down and engulf this candle and engulf this candle, then it's showing me that this is very strong, and it's more than likely going to continue down to the downside. So that is a bearish engulfing. Short means sell, sell means weak, sell is bearish, the bearish side of the market. Now, market's closed here, so that if the market's closed here, that means the body of the next candle is also going to open here, because the market closed here, it's going to open immediately on the next candle here. So here, what we're going to look at next is a pin bar. A pin bar is the opposite of a shooting star. So a pin bar at one point would have continued this bearish push, this big red push down. Price opened here at the bottom. So price closed here on this candlestick, opened up on this candlestick, and then it would have pushed down. So then price pushed down. Remember, this is a level of support. Price is pushing down, it's breaking down. Everybody thinks it's pushing down lower, but how many of us are so used to seeing price come all the way back up again and then closing up like this? And then what that creates is a wick to the downside, just like what we've seen to the upside, shooting star. This is what we call a pin bar. So it shows that price has tried to push down, but just like the opposite of the shooting star, price has said, hold on. The bulls have stepped in and said, you're not coming down any further. The bulls have put up a fight. They pushed price back up and said, we're stronger than you now. The bears have got weaker. They've seen that the price is starting to push back up. The bears are coming out of the market. They see that the bulls are getting stronger. The bulls are now pushed up, and now we're back above this level of support. And then whatever happens next happens. You can see here, what is this candle here, guys? This candle is a bullish engulfing, so it engulfs again. So this tells you what is happening in the market. And I know some of you will know this stuff, but we are going from the beginning, and we're going to go for every single part of price action. What I've just gone through in the last 10 minutes, talking about each one, I've taken you on a little story of the market. So I've told you this is indecision. The bulls and bears are fighting each other. Nothing can happen. They can't get past this area. Then I've told you that the price is then pushed up and engulfed this. That means that the bulls are stronger. But then this pushed up, it pushed back down. That meant that the bears stepped back in and took the bulls back down. And see here how we've just narrated a little story in the market. Go back to what I said at the start. Price action is telling you a story. Now, when I first showed you that, if what I've showed you here is, if you never saw candlesticks before, you wouldn't have a clue what I was going on about. You were just seeing colors on a screen. Now that I'm breaking it down to you, you now start, okay, now I understand. I understand what's going on. So we're going to keep it there with that and not go into too much other detail. As I said, that is all you really need to know for basic candlesticks. Dojis, bullish engulfing, shooting star. The opposite of a shooting star is a pin bar, and the opposite of a bullish engulfing is obviously a bearish engulfing. Then there's a couple of others that are very, very important, and that are tweezer tops. So I'm just showing you today what you need to know today, because I want you to have some practice with these as well. The other very, very important is tweezer tops. So what do you think that these are, guys? It's just two shooting stars. And why is it called tweezer tops? Because it looks like a tweezer. Simple as that. That's what they're called. It looks like a tweezer. Two long legs. If I see this in a market on a resistance, I'm going into sell, because there's a high probability that price is going to push down. If you're selling, if you see these at the right place in the market, people might see these at the wrong place and think they can sell it, and then they get wiped out. Because, as I said, there's one thing understanding price action, but understanding where to use it is a whole other thing that people don't get. Opposite of tweezer tops is what, guys? Tweezer bottoms. Simple, really, isn't it? Tweezer tops, tweezer bottoms. One of my favorites. Now remember, if this is a level of resistance and I want to sell, if I see these at resistance and I see tweezer tops, then I'm going to want to take a short trade. Short means sell, which means that the market's weak, which means that I'm expecting price to push down. Just like market structure or our top-down analysis, I want to be looking at taking short trades from resistance, long trades, buy trades from support. So if I see tweezer tops up here, I want to take a short trade down. However, I just touched on it earlier, what time frames would I want to really be seeing these? I'd want to be ideally seeing these on a daily or 4-hour time frame to really give me that belief that I can risk my money on a trade to expect price to come down from resistance back down to the next level of support. Then if I see this on a 4-hour time frame, I start getting excited. I drop down to the 1-hour time frame, and then I start looking for other reasons to take a short trade and look at the price action on the lower time frames. So something we're going to have to understand and get through in the next few hours or next few price action lessons is that price action, you have to flick through, you have to constantly be doing top-down analysis throughout the day on your chart. You need to constantly be going from 4-hour to 1-hour, 4-hour to 1-hour, or daily 4-hour, 1-hour, 15. You need to be flicking in and out to understand how price action and how the story is changing throughout the day, because obviously it's not a standstill, and the market is changing and telling you a different story from 1 hour to the next. But if I see this on a 4-hour, it gives me confidence. So I want to be seeing these type of candles, a shooting star, bearish engulfing, bullish engulfing. I want to be seeing these to choose a direction in the market. I want to be seeing them on a daily, a weekly, daily, 4-hour, and then 1 hour sometimes, but 1 hour is weaker than all the other time frames. Remember, the lower you go down, the weaker that these mean, or the weaker these candles are. The less you can believe, or the less probability of these candles being true, is the lower down you go. So if you go, once you get to 1 hour, 15 minute, 30 minute, they all start to become, you can't trust them as much. There's lower probability of them being in your favor and working. If you see good candlesticks like the ones we're showing you here, you want to see them on a higher time frame. So can it be that easy? Is this all you need to know? No, there is some more. 1 or 2 more things I'm going to show you now. We're going to start looking at a few more details. But these are the main ones you need to know. These are my favorite. These are what I look out for, because I want to buy high. Sorry, not buy high. I want to buy low and I want to sell high. I want to be selling at resistance, buying at support. So these are the candlesticks that I need to be able to do that. I don't really need other candlesticks. There's one more, which is my really is one of my favorite, is a candlestick formation that looks like this. Now just understand that I've just said formation, so it shows you that now it's not just a candlestick, it is a formation. It means more than one. So here, I'm going to put this back to green. Here is a candlestick formation, a bearish candle, small body candle, but I haven't finished this yet. And so there's 3 candles here. They may have little wicks to the upside, the little wicks to the downside. I don't need to draw them on because we're going to go through this properly in a minute. But yeah, you can see this is a candlestick formation. 1, 2, 3. Higher time frames, these are great. 4-hour time frames, these are great. What are these? This is called, one of my favorites to watch out for. Very, very highly accurate, if especially spotted on the higher time frames. A morning star formation. Something that is textbook. Some of you may know this, some of you may not, but it's probably overlooked so much because you've got so much on your chart, so many support and resistance, that you don't realize how much these work. And I get excited talking about this stuff because I know that this is going to be great for some people who have never heard it before. Some people may know some of this stuff, but once I start showing you this in a minute, coupled with course lesson 1, 2, and 3, you're going to see the power. Some people may know what a morning star formation is, but you're not using it in the right place. You're not looking for it. Morning star formation alone, now coupled with course lesson 1, 2, 3, 1, 2, and 3, can make you a profitable trader. I'm going to give you this homework at the end of this video and say, go and look at morning star formations. Go and look for Tweezer Tops and Tweezer Bottoms and tell me how accurate they are. Don't rush off to do it yet. I've got more to show you, but I'm excited for you to actually go and look at that. And then you're going to start thinking, this is really starting to click. This is really starting to work. But believe me, there's a lot more to it. There's a lot more still to come to really refine you. But these are great stepping stones. Morning star formation. Okay, morning star. Why is it called a morning star? This is called a star formation. Morning, because it's always at the bottom of a trend or the bottom of a move, or you find off support. So here is actually a morning star formation here. Bearish engulfing, a small middle candle, and then a bullish candle. This bullish candle doesn't always have to be this big. It could be this big. Usually you want it to be 50% above the previous bearish engulfing candle. So you can imagine that this bearish engulfing candle here, you can imagine that's about halfway. Ideally, we want this candle to close above halfway. So this is what you could be called a morning star formation. Very, very important. And yeah, it's one of my favorites. It's basically a reversal pattern in the market, whether that's a reversal of a trend or price rejecting of a level of support. It tells you that the market is rejecting a level. The bears have pushed down. The next candle, the bulls have pushed down, but they pushed down, and just like I showed you over here, the bears have pushed down, but the bulls have pushed all the way back up again, and the price is closed above the level of support. Support here. You can see the wicks at the bottom and the Tweezer Bottoms. The price has pushed all the bulls have pushed all the way back up again, and the body of the candle has closed above support. So it's showing that the bulls are saying you are not coming any lower than here. So it starts to show us that we can start to have more probability into looking at taking a buy trade. So here we can see a bearish push down. Price has not been able to cross that support. The next candle down, the bears pushed down, but the bulls pushed all the way back up again. The second sign that we're not able to go any lower. Then the third is the third bullish engulfing candle. Bullish engulfing candle here is engulfed this candle, and it's engulfed either 50%. Sometimes it will engulf all of this candle. The stronger, the better, and this gives us a reversal sign. And something we're going to get to in the next lesson is also the 3-star pattern, and also 3, I think I mentioned this before with trend lines. Remember, 3 is the magic. The 3 is the golden touch. 3 is a magic number in trading. Write that down, guys. You're going to see it again and again. 3 here. You can see 1, 2, 3. 3 is very, very important in trading. It happens. It's used all over the place. Morning star formation, very, very, very important. Great sign that the market's, if the market is a downtrend, that the market's going to stop and reverse. If we see the market pushing down like this, but then if the market pushes up, what do we expect to see? So we've got a morning star formation. The opposite of this is called I'm going to draw it out. I know this takes quite some time. Sometimes drawing it out just helps it stick in your mind a little bit more. This is called an evening star formation. An evening star formation. Why? Because it's in the sky. Imagine in the morning, the sun rises at the bottom, morning, starts moving up. Then in the evening, when the sun starts going down, evening star formation, it starts to go down. Morning star formation at the bottom, evening star at the top. These are the 2 candlestick formations that you need to know right now. And these are the candlesticks that you need to know. Let me just stretch this out. Don't know if you want to screenshot this. But yeah, these are the ones that you really need to know at the moment. These are very, very, very important. So we understand what candlesticks are. We understand the bodies. We understand the wicks. We understand price pushes up and closes. And that's what creates the wick. The top of the body or the close of the body, depending on the candle, means where the market closed and opened. So we understand that. We understand that price is telling us a story, and that every single candle is a time in the market. So here we're on the 4-hour chart, so it's showing us a time in the market. We understand that the higher time frame is more important with the candlesticks. The higher the time frame, the stronger the candlestick. So the weekly, the monthly, the weekly, the daily, very, very strong candlesticks. And then they get weaker as you go down. But 4 hour is still very strong, but they start to get weaker as you get to the 1 hour time frame. We're going to start looking at some live examples in a minute as well. But now we want to start looking. We know about them, who they are, what they are, and why we use them, because they're telling us what the market does. So we're understanding that we're using them because it's showing us what's happening in the market. And now we want to start looking at where. But there's one more thing with why we use candlesticks. There's one more thing in why we use candlesticks, and this will hopefully help you understand as well. So why? So we understand who, what, where, or we're going to discuss where, but why? One of the reasons why. Here are candlesticks now, so hopefully you're starting to understand this chart a little bit more now. You can see how price is respecting our level of resistance and support from our very, very first lesson, and you can understand that each one of these means a time in the market. Every single candlestick represents 4 hours in the market. We'll drop down to the 1 hour time frame. It represents 1 hour in the market. If we zoom in, you can see that. Now, if I just go back to the 4 hour time frame, this is hopefully sticking to your mind why we use this. There's lots of different types of price action. You don't have to use candlesticks, but this is what we use, and you're going to see why now. It's because you can see here on TradingView, you've got bars, candlesticks, hollow candles, which you'll be more used to, a bit more green and red. What else have we got here? We have line graph. You've got bars, but line graph is a good example. Line graph, okay, great. It tells me where the market's been, but it doesn't teach me, or doesn't explain to me what's actually happened. I can see that price has gone up and gone down. Many of you might see this on your iPhone or stuff like that. If you go into the stock section, you see a graph like this. Okay, that tells us that price has moved up and down. But what good is that for me or anybody else when we want to know where to buy and sell? It's just telling me that price has moved up and down. It's not telling me any more information. It's not teaching me what's happened in the market. It's not teaching me what's happened in that time frame. It's not giving me any information. I don't know really what's going on, apart from the fact that it's gone up and down. That's all it's telling me here. That's no good to me as a trader. I don't want that. I need to know what's happening. I need the market to tell me a story. I need the market to tell me what's happening in each and every time frame that I'm looking at, so I can make a decision what I think is going to happen in the next 1 hour candle, in the next 4 hour candle, or the next daily candle, or the next weekly candle, depending on what time frame I'm looking at. I can even go to the bar chart here, and you can see here, bar chart's a bit more clearer. It's showing me that price is hitting support, showing me it's hitting support, then showing me it's hitting support. But that's great. It's showing me that my support and resistance levels are that work. But it's not showing me how to enter, because I don't know what exactly these by looking at these bar charts, they're not really showing me what is going on in the market. It's not giving me a story. It's not telling me enough. It's not telling me, okay, the fight between the bulls and the bears, what's happened, how much they've been able to push back up, what's happened between that battle in the last 4 hours, what's likely to happen in the next 4 hours. But if I go back to this chart, now that I understand the language of the price action and the candlesticks that I showed you, now I can start to understand, okay, now I understand what's going on at this level. Now I understand what's going on at this level. So now I can start thinking about buying and selling. Now I can start thinking whether I want to buy and sell. So look at this here. Let's highlight this area. Go back to the bar chart. Okay, price hit. I wouldn't have known, okay, there's a bit of rejection there. I don't know whether to buy or sell. I don't know what to do because it doesn't really tell me much. Go back to here. We can see here, price has hit down. So what did we just talk about? I'm going to zoom in here. Price has pushed down, hit my level of support, which we know from course lesson 1 is very, very strong. So we want to wait for price action. You can't just buy off support. We need to let price action get to that level and tell us what it wants to do. So that's another thing with price action. It's all, like I said, it's always telling us something in the market. So we don't just push, put a buy order here and expect it to go up, because we don't know if this candle is going to push all the way back down and take us out. But by understanding price action and letting it hit our levels of support and resistance, which we've mapped out since lesson 1 and 2 and 3, we then wait for price to hit those areas and we can decide what it's going to do. So for instance, here we can see price push down, push through our level of support. Next candle was a doji. See this doji, the doji candle I showed you? So we've got a bearish candle down. We've got a doji candle. Bears and bulls were fighting, indecision. So this candle alone shows us that here we've had a push down into support, but then the push down stopped. The bears couldn't push down any lower. Indecision in the market, they're fighting. It means that they might be losing ground and things might change. Here we can see price push down, the candlestick. You see the wick down here, but price pushed all the way back up again and the candle closed above. Just like what we showed you here. For instance, here, price pushed down. This wasn't a pin bar, but you can imagine that price pushed down. Like here, this candle, price pushed down and the body closed back up again. Let me just go back to this chart. Then here, price has pushed up. But also, do you notice anything here, guys? 1, 2, 3. Candle, doji, bullish candle, bearish, doji, bullish. Here. They come in all different shapes and sizes. So that's why I want you guys to do your homework and show and see how often they work off our levels of support and resistance. So the monthly key levels that you've done, trend lines that you now know, draw on your monthly key levels and draw on your trend lines and see how well the market reacts purely from picking out what I'm going to show you, tweezer tops and morning star formations, and how in the future we're going to show you how to take trades off those as well on the next lessons. Morning star formation here, morning star formation here, 1, 2, 3. Price is rejected off our level. We know that this is our level of support. It's come down, it's rejected, 1, 2, 3. Even if you entered here, we'll be getting better entries that we teach you. But even if you entered here, price pushes up, you've made a nice 60, 70 pips. Nothing wrong with that. Let's just open this up. So here, you can see here, this is just here that I'm going to show you this. So this is on the 4 hour time frame. Morning star formation. Price pushes up, doesn't quite reach resistance, comes back down. 1, 2, 3, 1, 2, 3. Bearish. This is a bearish engulfing. So remember, I said about closing 50% of the prior candle. It hasn't quite done that, but this is where we're going to show that they come in all shapes and sizes. But here you can see 1, 2, 3. But see how it's reacted off support again. This is where it's important about candles. We're going to get into more of this. I keep saying this, guys, but we're going to get into more. Seeing a morning star formation in the middle of a chart doesn't matter, and this is where people get confused. If I see a morning star formation here, for instance, it's no good to me. I need to see it off support. I need to see an evening star formation. This one, I need to see it off resistance. I don't care if I see it in the middle of a chart. We need to couple price action up with lesson 1, 2, and 3. It's very, very important. In trading is all about a game of probabilities. Nobody knows what's going to happen next, but you have to stack the probability onto your side. Rather than it being 50-50, you want it to be 70-30, 80-20, 90-10 probability in your favor. The only way to stack it into your favor is by building up the confluences. Number 1, level of support. Number 2, if you can couple that level of support up with a trend line support, that means there's 2 reasons for a confluence if price hits there. Number 3, market structure. These are the 3 course lessons. If price makes a high, makes a higher low, and hits your support and your trend line and makes a higher low, then there's 3 confluences there to buy. I'll trying to get a real life version in a minute. Number 4, price action. Price action comes down and the candlesticks do this. That's 4 reasons for you to buy. And then you've got a high probability trade. You can place your trade with ease. If it goes wrong, it goes wrong, but you know that you've got a high probability trade, and 9 times out of 10 or 8 times out of 10, you're going to place that trade and you're going to make money. Here, morning star formation. Morning star formation. What have we got here? Morning star formation. 1, 2, 3. Here, then we come up. People don't use them enough. What have we got here? Doji candle, doji candle, doji candle, doji candle. What is this telling us? Indecision in the market. Bulls are pushed up, big push up, can't get that past the low, can't break the support. Price tried to break down with support. The bulls got here and said, no way, you're not going any further. Push price all the way back up, not even just above support, but all the way back up here. See the body of the candle? That's where the price closed. So the bulls immediately just kept overtaking the next candle. Bearish engulfing here, morning star formation, but then it hit resistance, and this is why we're going to come into this. I keep saying we're going to come into it more. I'm not too bothered about price action unless it is at key levels of support, resistance, trendline support, or market structure. Too many people, and this is what's going to be talking about in lesson number 2, too many people get spooked out by price action when it's in the middle of support and resistance, and they get in and out of trades because they're scared, because they're sitting and watching price action on lower time frames and getting spooked by the market and taking when they see a candlestick that they don't like or goes against their trade. So if they're bullish and they're looking for a push up and they see a bearish candle, they get scared and they get out of the market. But that's what happens in the market. Market has to go from A, support, to B. But it's never going to go in a straight line. We know that from market structure and everything else. It's never ever going to be plain sailing. There's going to be choppy waters from A to B. So therefore, what happens in between A to B, I don't really care. I set my trade, I walk away. I know that I'm expecting price when it retests support to do what? Go in reach of resistance. Go searching for that resistance. Once it gets to resistance, then I can take some profit. Especially if I see that price starts showing me these doji candles. Why? Because it's showing me indecision in the market. So it's telling me the bulls are not strong enough to break above. They keep fighting, they keep fighting, they keep fighting. They're not strong enough to break above. Boom, what happens? The bears take over and start pushing back down again. Now what's happening? We're pushing down, we're pushing down, we're pushing down. We've come back down to support. The wick here, prices try to break, push back up. Can't break below. The next candle, bullish engulfing. See how the body of this candle has engulfed this candle? This body of this candle here has engulfed that previous candle. Telltale sign. The bulls are back in control. That means they're pushing up. Bang. Even if you had a buy here, stop loss below the low. Still, what have we got here? We got 75 pips. And we've got much better entries, but these are examples. So morning star formation here, 1%. Morning star formation here, push up here. Morning star formation here. Bad risk reward, but you can see what I'm saying. This is just anywhere in the market I've just pulled out for no reason. Here then, we come up, we haven't hit resistance. I'm not really bothered until we get to resistance. Price is pushed up. Then you can see here we've got rejection. Here, not great price action here, to be honest, but we're showing rejection. You can just see here from price action, not candlesticks that we've taught you, but you can see prices pushed up, can't break above prior resistance, body of the candlestick closes back down. There is a very sloppy evening star formation here. 1, 2, 3, prices pushed down. So you can see price pushing down here. Then as it starts moving back down, we're moving down, then we come down here. And we hit support and we'll go and so on and so on. We can see here that we've got morning star formations, evening star formations, and so on being used all the time. Now, as I said, what I want to do, I want to go through a few more examples actually. I'm just going to go back to this chart here quickly, my clean chart, because as I said, I don't want to have all of the, sorry guys, I don't want to have all of the support and resistance levels. I want to keep the chart as clean as possible because it helps me see the price action the best way possible. So let's just go back. We know the pound has been in an uptrend for a long time. I'm just going to go back to somewhere random. Let me just try and view this on a higher time frame. Where are we with pound at the moment? I've zoomed out so much. Let's have a look here, for instance. Let's have a look here. So what I want you to do is go through different charts and and spot morning star formations and evening star formations, and just see. First, go through all your charts, do the monthly top-down analysis, and then go through and highlight every single morning star formation and evening star formation you find, and see how well price played out afterwards. We can then look at how we can trade those more in future episodes. I'm also going to just have a look at for some Tweezer Tops or shooting star candles, which I showed you a minute ago. But as I said, go through all of your charts. This is now that we've gone into over an hour and we've only started to scratch the surface. So I don't want it to be too overwhelming. But here you can see my monthly key levels of support and resistance. You'll be able to see how well the candlestick patterns work. You can see here bullish engulfing, price broke below, bullish engulfing back above the key level, buy signal there. Where else have we got? Here a bit of an evening star formation. Here an evening star formation. Here there's lots more that I'll go through. This is on the 4-hour time frame. Let's drop down to the 1-hour time frame quickly. You can also see this is how we refine our entries, guys. So you can see here bearish engulfing, evening star formation here. So here was the 4-hour indecision. Here, drop down to the 1-hour time frame. Once we understand there's indecision, and we already know that we've got a key level of resistance, we can drop down to the 1 hour and see here 1, 2, 3 evening star formation. Wait for the price action to show us something. Here, wait for price action to teach us something or show us something in the market. Here, can't price broke above, price broke back down, can't break above this resistance area, price broke below, bearish engulfing, shows us just like over here. Bearish engulfing candle. Got a candle here, bearish engulfing, shows us that price is going to push down. Here, come down. Let's have a look what else we've got on the 1-hour time frame. Some shooting stars, which we're going to get to next. But yeah, I just wanted to go through all the different time frames, guys, and have a look at the different. Here we've got morning star formation, 1, 2, 3. Here we've got a bit of a sloppy morning star formation. But I just want, here we've got a bit of a tweezer top. Got bearish engulfing, tweezer, bearish engulfing here. So yeah, I just want you to go put your monthly key levels on and then start going through your chart and seeing at how well just these two candlestick formations work. The morning star formation and the evening star formation. Morning star formation, evening star formation. Now let me just quickly go back to this clean chart, like I said, and let's not confuse things too much. So I want you to do that with the monthly key levels of monthly and weekly support. Then I want you to also do it on trend lines. Get a clean chart like this and see how well it works on trend lines. Let me just go to the middle here. So here we've got trend line 0.1. Let me just do it here. 0.1. Start off here first. This is the 4 hour time. Let me go to a 1 hour time frame. What's happened here? Let me go back. Apologies guys, let me just stay on the 4 hour because it's getting late on this episode. Episode number 2 is going to be coming quite soon after this. So here we've got a trend line, and we know any 2 points cause a trend line. 0.1, 0.2, 0.3 prices come down, but then bullish engulfing prices come back up. So it shows us that the bears are pushed down, but the bulls have come back up and been able to engulf this. Then we want to look for a push back up, but it shows us that the bulls are in control. But there was no entry there. Here 0.1, 0.2, 0.3. You can see here 0.3. So we always want to look for the golden third touch of the trend line. Any 2 points make a trend line. 0.1, 0.2, 0.3. Price came down. Then we had a bullish engulfing. So that shows us that we can buy now. That the bulls have come back in the market. Bullish engulfing previous candle here, but not only this candle, this candle, this candle. So it shows a very strong buy, or shows very strong strength of the bulls coming into the market. So it shows us that we can look to buy. Even if you did buy here, wouldn't have been a great entry here. But even if you did buy here, you still would have done very, very nice, because you can see here that's where the bulls stepped into the market. We wouldn't want to buy here. Future lessons are going to teach you how to wait for a retracement. But even if you bought off that bullish candle straight off price action, there's nothing wrong with it. You still made 2%. If we actually just zoom back out to where we are now, I don't know how far we've gone, but you can see here 5%, 10%, whatever. This is just purely just anywhere in the market that I've just picked up. And even without trying to refine the entries, 0.1, 0.2, 0.3, bullish engulfing. It means the bulls have taken over, and now you can move back up into the market. But see how you don't just buy off anywhere. Until we put this trend line on, we didn't understand what price action was telling us. So now, layered with course lesson number 2, we can see that there is a reason to buy. Also higher high, higher low, higher high, higher low. I'm going to drop down into the lower time frame. Just before I do that, I hope you understand course lesson 3. So we've got higher high, higher low, higher high, higher low. So this is why we can look to take a buy trade. And now what I've done here, guys, is I've just dropped down to the 1 hour time frame to try and get a better angle. So I just showed you on the 4 hour how we had that big 4 hour bullish engulfing candle. Obviously here, or when we came back down for the 4 hour bullish engulfing here, if we drop down to the 1 hour time frame, it helps us refine that entry. So now if I take this away, this is what I'm going to teach you on the next episode, down to the 1 hour, you can see here we have 0.1, 0.2, and then what we have here is 0.3. But before today's lesson, all we knew was that this was 0.3. So we had 0.1, 0.2, and 0.3. Remember these green circles from our previous lessons? So we knew that this was 0.3. But now that we know a bit more about price action, and we're only scratching the surface, and it's already gone into way more than an hour, here, this gives you something that you can buy and make money in the market. You're waiting for 0.3. You wait for price action to get there. Remember, we're using candlesticks because if price was a bar chart, we wouldn't understand what was going on here. So the reason we're using candlesticks is because it's telling us the story of what is going on. So it's telling us what's happening. So by understanding what the market's telling us and understanding the language of the market, it's telling us that price has hit the 0.3 of the trend line. But it's also telling us that we've had a bullish engulfing. So this candlestick, this 1 hour time frame, Price tried to break the trend line, but the 1 hour candlestick pushed up and engulfed that previous candle. So that push down where support tried to break, where the bears tried to break support, the 1 hour bulls pushed back above. And remember, even though we're on an ascending trend line, remember support and resistance. Trend lines are support and resistance. So just how we can see here when price tries to break level of support, a horizontal level of support, and price pushes back up and we have a bullish engulfing, it's the same with trend lines, because trend lines are a form of support. So here, just imagine what you're more used to being able to see is that, imagine there was a level of support here, price tried to break down, but then price broke back above support. Well, now it's done that on an ascending trend line. So here we've got a bullish engulfing. Once we get used to understanding price action on a higher time frame, we can drop down to the lower time frame. Here you can see there would have been a refined entry where you could have put a stop loss below here, bullish engulfing, stop loss below the last low, and then you see a nice move up to the upside. And then this means that your entry is refined, and what I was just showing you a minute ago is now it will turn into an even bigger trade, where you can be making 7, 8, 10%. This is purely just off what we're showing you here, just off the trend line strategy, trend line strategy is coming soon, guys, by the way. So teach you how to trade that as well. So then also you've had higher high, higher low, higher high, higher low. We know it's making a higher low, it hasn't broken the last higher high. Great entry to take an entry on this. Price pushes up, that means we need to adjust this trend line to here. So here we adjust our trend line to here, prices come back down. Let's have an example of what's happened here. In this instance, price has broken through. 1 hour has broken through. Then we've got a Doji candle that's come back and retested the back of this trend line, which means it's retested this as resistance. So it's broken support, come back as tested as resistance. However, this is on the lower time frame. So the lower time frame, we know we can't trust it as much. We're seeing a bearish engulfing come back down, so we're watching this. We continue to watch this at the moment, but we know from market structure that here is the important area. Not there actually, it's actually here. Because of the higher low, we know that even though price has broken the trend line, it hasn't broken the trend. So even though price has broken down here, there's a good potential that we can turn bullish as we start to push up from around this region. So you can see we've got this support level here, especially if we can couple this up with, say, potentially a monthly support level, which will happen a lot of the time. For instance, that will give us another reason to look at potentially taking a buy trade here. So you can see price is broken through the trend line. I don't want to go back to the higher time frame because it's going to throw my chart off. But you can see here, price comes down, price breaks this level of support. It's going to go in search of the next level of support, which is over here. Price comes down, and then we can start seeing we're having this rejection here to the downside. Some wicks, price is rejecting here. We've had a bullish engulfing here, and price starts to move back up. Let me go back to the 4 hour chart quickly. Remember, I'm pulling the charts from anywhere, guys, to try and just give you examples. Let me go back here now. So here, another good example. 4 hour time frame, higher time frame. So we've got point 1, point 2. Price pushes up, higher high, higher low, higher high. Price pushes down. We have a break of the trend line, but we haven't broken the trend. You can see here 4 hour. What does this 4 hour candle show us? This candle is called a pin bar. You can see that the bears have tried to push down and the bulls have pushed all the way back up again. So this is a strong candle. So this candlestick here means that price has tried to push down, but it's pushed all the way back up again. So here is a strong level of support. So that gives us a good indication to take a buy trade. Here, then we could, after this candlestick, we could take a buy trade on this pin bar. We're going to go into this more in the future. What we want to do here is the 4 hour has now told us that price has rejected this region. I'm going to drop down to the 1 hour one more time, just for the sake of the example. Where are we? Just so I don't lose, I'll just drop down. But here we can see 4 hour. Remember, the higher the time frame, the stronger. So we've got a nice strong 4 hour pin bar showing that price has tried to push down and it's pushed all the way back up. So strong rejection. If I go back down to the 1 hour time frame, so then what we want to do is we drop down to the 1 hour time frame, like I said earlier, to try and get the entry. 4-hour time frame shows us the direction. Daily 4-hour shows us the direction. 1 hour is to get the entry. So now this is a great example. Again, I picked this out of anywhere. So it shows if you go and do your homework, this is an hour and a half long now. I don't want this to be too long. We're going to go do price action part 2 coming out very, very soon. We will break down the next step. But I want you to do what I'm showing you here. This is a great example. 4 hour, we saw a break of the trend line. But what did lesson number 2 and lesson number 3 tell us? Breaking the trend line does not mean breaking the trend. So we watch price action. We let it show us what it wants to do or what it's doing. Read the price action. Let it show us. Let it tell us something. Don't guess the market. The candlesticks tell us a story. We can, by understanding what the candlesticks do, we understand the language of the market. Let the market tell us. Don't be eager. Don't jump in. Don't try and take a trade. We saw on the 4 hour, we had a pin bar. We saw on the 4 hour, we had a pin bar. Pin bar is a reversal sign, especially if you get a bullish candle afterwards, because a bullish candle afterwards becomes what? A morning star formation. One of my favorite things to trade because it's almost a great confirmation of a buy. This is a great confirmation of a sell, especially if it's coupled with course lesson 1, 2, and 3. Support and resistance, key levels of support and resistance, trend line support and resistance, and market structure. So here, what I just showed you was a 4-hour pin bar. So we identified that there was a 4-hour pin bar. Now we drop down to the 1 hour time frame, and what do we see? What can you see, guys? Here was the pin bar. Here, that 4-hour pin bar. When we zoom into it onto the 1 hour time frame, that 4-hour pin bar is a 1 hour morning star formation. That's our buy signal. So now what do? We press buy. We put our stop loss below the last low, or 5 pips below. And now let's zoom out. Boom, 3.5%. Let's go back. Still hold that trade. Bang. You're making 5%. Even at 1%, 2%, you're making more than what your money makes if it's sitting in a bank for a whole year. What the interest your bank will give you, just by taking a trade like this on whatever your bank your trading balance is, whether it's £100, £1,000, £10,000, you could have made 2 or 3% just by combining the 4 course lessons that we're showing you now. I'm going to just rewind that back real quick just so you understand. Remember, I've picked this from anywhere, and trust me, guys, you can do this. Take your time and do this on any single chart, and send me a message on Instagram. I'll just bring it back up again. Send a message on Innovation Markets or my own Instagram, BD_FX. Go to that, do this, and then send me a message on what you think. And how often you see it, because it happens time and time and time again. Now that I've just highlighted it to you, you're going to see it happen time and time again. Get your support and resistance on the monthly. Yes, I am repeating myself, but I like to repeat myself because it helps it stick into your mind. Get your support and resistance on the monthly top-down analysis. Identify how many times you see a morning star formation, an evening star formation, and price reverses. Highlight how many times you get a bearish engulfing or a bullish engulfing off support and resistance, and how many times price reverses in your favor. Forget about the in-between. I don't want to know about the noise of the market. We'll get to that more in the next lesson. I don't want to know about the noise in the market. I want you to go through, make your support and resistance from top-down analysis, monthly, weekly, daily, and then I want you to highlight how many evening star formations and how many morning star formations you find across however many charts you look at. And then see how often market moves in your direction once you highlight it. And then over the next few days, highlight it when you see one, and then watch price action, how it moves afterwards. I want you to do that. Then also I want you to do is to find trend lines. Get your point 1, get your point 2, and then highlight like what I'm showing you here. Here, just the candlesticks I've shown you. Don't look at any other candlesticks. Here, what I've shown you today, 4-hour time frame. Because weekly, daily, 4-hour is for direction. So 4-hour is telling you the direction of the market. 4-hour candle here is showing me a pin bar. What I've shown you today is that a pin bar is a reversal sign if used with course lesson 1, 2, and 3, support and resistance and market structure. Here, highlight that 4-hour pin bar as an example, and we'll do more examples of how these work. This is just one of many examples. So if you're getting excited about this, wait until you see the next lessons. Highlight that 4-hour, drop down to the 1 hour, and then see what it consists of. You don't have to take trades, just highlight them and back test this. Here, 1 hour morning star, 1, 2, 3. You can see that that was your buy signal from what I've told you today. And that's where you can buy the market, and that's where you make your money. So bang, from just there, you can see you could have made 3%, held it longer, more, whatever you want to do. So go back and test that out. Here again, you can see here, 1 hour time frame, because price is pushed up. So we just showed you here, morning star formation, price pushed up. So we need to adjust our trend line to this low. Adjust this trend line, price pushes back down. What have we got here? 1 hour time frame, Tweezer Bottoms. 1, 2, Doji Candle, 3, Tweezer Bottoms. What is this showing us, guys? It's showing us that price is pushing down, bulls are pushing up. Price is pushing down, bulls are pushing up. Tweezer Bottom. Tweezer Bottom. Price cannot sustain below support. The bulls are saying, no way, pushing it back up again. Here, Doji Candle, indecision. Next candle, big pin bar, bullish engulfing. So even if you entered after the bullish engulfing, using the third touch of the trend line, couple it up with support and resistance, hopefully on the monthly, weekly, or daily time frame, and bang, there's another 3%. Okay, price is broken up above, respect to this trend line. 1, 2, let's get rid of this support. Price is rejected here, pushed up, come back down. What's it done here, guys? What can you see? What am I highlighting? 1, 2, 3, a morning star formation. 1, 2, 3. See these 3 candles? Morning star formation. Rejecting the trend line. All you need is a trend line and understanding that you have to wait for price action to react from a support and resistance area. If I see a evening star formation or a morning star formation in the middle of a trend, I don't care about it. I want to care about it if it's coming to hit a level of resistance. Like here, I know there's resistance. So if I see an evening star formation here, then I might think about getting out of the market or selling. But if I see it here where there's no real support and resistance, I don't care about it. But we'll get to more of that in the future. But here you can see I pulled out a GBP USD chart from anywhere. I've gone back to, where am I? I've gone back to the 1st of October 2020. We've seen that there's 3 or 6, 9% that you could have made just by using the trend line and by understanding the morning star formation and understanding the 4 hour is the direction, the daily, the 4 hour is the direction, and dropping down to the 1 hour to take the trade on because 1 hour and lower is what you want to use to enter the market. There may be a lot to take in. A lot of that might have been what some of you already know. But I hope that last bit there now starts to show you that there's a lot more coming. But I will always cover everything from the beginning because this is a course for everybody to start from the very beginning. People who didn't even know what Forex was last week until they come across our course lesson 1, 2, and 3. We're going to take you from a complete beginner to advanced, but you're going to get there very fast by doing it with us. And yeah, I'm looking forward to the next lesson already. So this has been an hour and a half long, and I've only scratched the surface. I've only shown you a few candlesticks. We've got more candlestick formations. We've got patterns and price action. There's loads more in price action. So this is Forex course lesson number 4, part 1. Hope you guys enjoyed that. Please go off. I will repeat it one more time. Go off, do your homework. First lesson, do all of your monthly key supports and resistance levels, monthly, weekly, daily. Then use the highlighting tool that I have here and go and find all the evening star formations and all the morning star formations reacting only on the support and resistance. I don't care about the other ones. Just look for support and resistance and where the morning star and evening star formations react, and how well they work off support and resistance, and how with the risk reward tool, how many buyers, successful buyers, and how many successful sells you can find just by course lesson number 1, which is told you how to find your support and resistance, and by using price action, what I've shown you here with course lesson number 1. Then also course lesson number 2, put your trend lines on, find 2 points, wait for the third touch, don't have to take the trade, but wait for the price action. Remember, price may break that trend line, course lesson number 3, but it may not break the trend. But now that we understand what the candlesticks are doing when they break the trend and the story they're telling us, it can now help us make a decision whether to enter the market or not, and if it's breaking, if it's a fake out or not. So get the trend line out, just like I showed you. Have patience, let the market tell you the story, let it tell you what it wants to do next, and then look for morning star formations, look for evening star formations in a downtrend. See how well they work off a trend line. Place the buy and sell order, and see how many winning or losing trades you have. Also, with what I just said, you couple that up. Try and look for tweezer tops. If you can't find morning star formations, you might see tweezer tops. If you can't find evening star formations, you might find tweezer tops. And then just remember these candlesticks. These are the important ones. Drill them into your head. Back test. The more time you spend on the market, the more you'll know them off by heart. The more time you spend learning a language, the more fluent you're going to be. Hours and hours and hours on the chart, then you'll start seeing this stuff in seconds, just like what we do. I hope that you understand that, guys. For it is price action. It's almost lesson 1 on price action, and there's going to be 2 or 3 or 4 parts to this. So we had to start off with the foundations, but even with the foundation of price action, I hope that has opened your eyes a little bit, and now we can look forward to what's happening in price action lesson number 2, number 3, and number 4, which are coming very, very soon. Lessons are going to be coming at you on a weekly basis again, guys. So hope you like that. Leave a comment, let us know what you think, and yeah, we're looking forward to the next one. So hope you enjoyed that. Looking forward to the next one. Speak to you soon.